The biggest monthly news is now upon us. Yes, in less than 24 hours, we'll be finding out what's going on with CPI inflation in the US. We'll also be discussing JP Morgan's playbook into this event in today's video together and whether we can actually see mean reversion. Generally, inflation numbers are the catalyst for markets. So as markets rallied up through the previous session, will they continue? We've got breakout zones and key levels coming up, depending on how this event plays. Remember, it's going to be about patience and reaction. So let's get into it together and take a look at the biggest data for this month. Well, welcome back everybody to the Daily Show where we discuss stocks, commodities, and cryptos. We've got all of those coming your way along with our macro thoughts, leading indicators, and of course the hottest charts. Let's take a look at the last 24 hours because it was an interesting one. Energy was doing really well, thanks to some bets going into that. We've got big breakouts in oil over the last 24 hours, and it was a sea of green through not the usual channels. Microsoft and Apple weren't really rallying the markets. It was instead hyper stocks that were doing very, very well. So what is going on with inflation? Let's get into that straight away. Over on our Twitter, follow at FX Evolution, links in the description down below. We shared JP Morgan's game plan for CPI day. And I think this is going to be, really quite an important factor. Do we see inflation spike up thanks to something, or are we just going to see it moderate and come back down? 45% probability, according to this bank, that we hit between 3 and 3.2%. Now, what are the factors leading into this? Well, I think one of the big ones is that we've seen the Eurozone continue to have problematic inflation. This is similar to what we've seen in Australia, what we've seen in New Zealand, and of course, what we've also seen in Canada. Take a look at this. It's spiked back up. And this is traditional for what happens usually with inflation. We tend to see a drop, a dip, then it moves up for a little bit, and then it falls back off. In fact, I don't think there's ever been a time where we haven't seen a secondary kind of peaking of inflation before it continues to drop off. Have the Fed done their job yet? Well, a lot of people think so, but most people are talking about this particular thing, which has got to do with used cars and trucks. Now, if you have a look at the lag here, this is showing you that there may be used cars and trucks are showing us a decline here in inflation. And that's got the market feeling very, very excited. Will it be true again? It's been used by Wall Street. It's been in a lot of their reports. And I think it's something that a lot of people are considering. So used car sales are certainly one of the big things that people are reading into. Now, we discussed in our previous video that maybe the thing propping up this market is not the traditional central bank liquidity, but it's instead this, the BTFP. Now, the BTFP has been steadily rising over the last couple of months, and it was created originally back in March to help support the banks in basically their endeavors to keep people confident. You can see here BTFP usage over the last couple of months, and this is a relatively new central bank technique. And you can see that this has been probably the big kind of catalyst to allowing markets to really stabilize themselves during a time of extreme crisis. So it's again just showing us why the central bankers control this market really, and we already know this. So what is the BTFP? Well, it allows banks to borrow at par values from the Fed against their securities for a 1-year duration. This is instead of being forced to sell into the open markets for losses. So if we wonder how they were managing to do that, well, BTFP was, of course, a big thing. Now, in the recent weeks, we've actually seen some decline in these numbers. I think to the tune of around 5 to 10 billion. Now, if we do continue to see decline in these numbers, that will be an interesting factor that could be a catalyst coming into one of our seasonal events, which is the back end of July into August into October. We'll be following that story, so make sure to subscribe if you're interested. But this has been one of the factors to keep the markets up at this point. We also know that some bears got unwound massively over the last 2 weeks as markets ripped up. Basically, that last push of the big tech stocks was too much for even the big hedges, and the big bears got destroyed, similar to what happened in 2020. You know what happened about a month after that, or even a few weeks after that? We actually sold off, giving ourselves a dip that happened in, finally, August, September, October of 2020. The NASDAQ 100 is also rebalanced. This could be part of the reasoning why you're seeing a bit of a sell-off on the bigger tech stocks. And also a rebalance just occurred for the Russell 2000. And funnily enough, that's been one of the best sectors or the best indices of the last week. So after that rebalance has occurred, everyone's buying it, and particularly they're buying hyper stocks, which we'll look at later on today's video. For investors out there that are watching for the first time, you may not be aware, but forward PE of the market is something that's very important to look at. 19.13, getting close to that one standard deviation away. It's not usually the best time to buy when you're looking at that particular metric. And this is one of the many reasons we consider markets, whether we're an investor, trader, or of course, scalper in these points. So let's talk about earnings. We know that's coming up very, very soon, and it's all about banks. So we'll be watching the banks very closely this week. We start off with CPI, which is of course on the Wednesday. Then we go into the banks, and what we're looking at in particular is the forward guidance. Not so much the earnings right now. What are they saying about the future of the markets? I'm sure the markets will be freaked out in general. Now, in terms of discussing dark pool liquidity or any types of unusual prints, we mentioned that we saw a VIX print earlier this week. In fact, this came through on the Monday trade. Now, could it be telling us that there's going to be a spike after inflation? I think there's a few bets going in for YOLO kind of reasons into a spike in the VIX and also a potential spike in the VIX due to earnings season. So yeah, somebody has traded. They've traded a large quantity. We also saw that and reported it on the Russell. And funnily enough, here we go 3 days later after that report, the Russell's been the best performing market. So something to heed there with the VIX. Certainly a big read there and unusual in itself. If you're a crypto trader, just remember the halving cycle is something to keep in the back of your mind. We've already done a little bit on this, but we will do more on it in the future. And in general, crypto would kind of sideways around this period of time for a little bit. And then around here is where we're interested in finding out a little bit more. If crypto does break out though, and the NASDAQ continues to strengthen, do expect things like crypto to jump along. And the reason is because people will be in hyper stocks, and in many ways, something like Bitcoin moves with hyper stocks. It's what we saw in 2020 into 2021. We have to be aware that that could be on the horizon. Let's talk about seasonal trends, because in pre-election years, this is what tends to happen next. The markets kind of hover around the top, being the S&P and the NASDAQ. Funnily enough, it's exactly where we are. Then in the middle of July, which is basically the end of this week, we usually start to see a little bit of a dimming of the market. Now, this is traditional for what's happened in previous years. Of course, it doesn't represent a guarantee that's going to happen again. But if we are going to see weakness, the next 2 to 3 months tend to bring the weakness and tend to bring these particular reports. Here's what happens when we have a big first half. We often go into kind of a sidewaysy market for the next half, and we've reported this and talked about it many times together here on the channel. Let's move over now to the wonderful world of options. What was doing well through the session? Well, we had a couple of really unusual trades, and I think the big one here was Activision Blizzard. They are moving closer with Microsoft. We did see some either buying or selling that was occurring on that stock for the day, so it makes sense that we'd see it in options as well. The Russell 2000 was an interesting trade. Of course, that was up 1%. We saw Coinbase doing well. A few people jumping into, I think, anything to do with crypto at the moment, purely because of the hyper stocks. But the stocks that we've been talking about recently, PayPal, Zoom, they've done very well on the session. Zoom was up 3.1%, finally getting some unusual options activity. Let me scroll down, though, and show you what I think is more interesting. 62% of all of the options transactions were calls into this inflation number. Only 38% were puts. That's unbelievable. That's one of the highest reads I've seen. And admittedly, it was on lower volume, but expect that volume to spike over the next 24 hours. Let's move into the charts, and we're going to start with the biggest one to be watching. If you're a bear on markets right now, you really just care about this chart. You want markets to accelerate in yields. What that means is that we're going to see higher yields and probably for longer, and of course the market will crack it. Why? Because it's going to be the fear of the unknown. Do remember that the new norm just becomes a normality, but when you're in the fear of the unknown, markets don't like uncertainty. So this is going to be one that I'm going to set alerts for, and of course if you're a bull, you want to see yields drop off. If you're a bear, you want to see yields spike and accelerate into the fear of the unknown. So US 2-year and 3-month, both worthwhile having on your charts over the next 24 hours, probably into the next week. Let's take a look at Magma. Did we see any weakness really in the big tech stocks? Not really, just kind of floated around in these highs. Of course, we talked about that before, but the most interesting component was RSP. Here it is, equal weighted markets. We're seeing breadth return back to the markets, and look at these volumes coming back through. Few large trades through here and here. We will be reporting dark pool trades moving forward, so make sure to subscribe if you're interested in that type of stuff. It can be incredibly helpful for your technical analysis skills. You put technicals with dark pool with a bit of options. Well, let's just say that's a match made in heaven for sure. Let's move over to HYG, and of course we've got here high yield corporate bonds, and overall we've seen 3 days of movement up in junks. That's usually pretty good for the market. We are looking for a decline here if we're bears, and we're just not seeing it in the high yields. TLT, interesting switch here. Now we've go down, we saw a gap down, a little gap up here on trade. So could this be the low for treasuries? Well, funnily enough, it's coming into the CPI number. And of course, if we get a sell-off in US 2-year and 3-month, even though this is based on the longer term date yields, we will most likely see treasuries find base here. It does look like a basing pattern, but it's all going to be around in inflation. So at the moment, it looks like it's basing into the inflation number itself. The volatility of the volatility, or the VVIX, you can see has continued to be high. That's because both the CPI event and banks this week with earnings, and even the PPI as well, are going to be volatile. Therefore, we've got the volatility of the volatility up. If we take a look at the VIX itself, it jumped a little bit and it kind of hit the top end of its Bollinger, and it's just kind of come back down. I don't really like TAing the VIX. We've talked about it many, many times. We're just using it as a catalyst really for market actions, whether we want to be fearful or greedy at any particular time. The skew got crushed again over the last 24 hours or the last 48 hours, which was good. We usually see a doubling of the skew. Either way, whenever you look at any of the previous times where you were topping off on markets, you often come up, big peak, drop down, peak it up again, and then see those sell-offs. And there's been several times when this has happened with the skew over the last couple of years. So it's kind of like an A-B kind of movement there. Put call ratio was in the floor. I don't even know if this is real. It's probably wrong. But yeah, we saw so many calls. Is that something we should fade? Well, I think we'll know. As I said, patience, react, don't predict is going to be the big thing here in the markets. As we know, traditional ways of looking at central bank liquidity, along with pretty much the most of the stuff, except for that new code, have shown us that we've got huge disparity. I do still believe we have a huge disparity between central bank liquidities, but of course there is that newly formed thing that happened in March, which has been helping the banks to kind of keep themselves a little bit solvent and not take huge losses in these markets. If that dries up, well, we've got problems, and we will be reporting. Few people are tracking that, so of course we'll share that when we see it. But at the moment, central bank liquidity is obviously very huge disparity from the markets. This is the chart I think everyone's talking about. We do have a TD9 here, so maybe it's a little bit extended into inflation, but oil actually broke out ahead of the inflation numbers. And I haven't been negative on oil recently. And if you've been watching the channel for a while, you would know I'm a horrible bear on this thing. I have been for a while. And yeah, I've done okay off oil. But I do think that there's a chance that it might move up to 77 first. Now, the thing with oil is it's been running up for a few reasons. Number one is OPEC. Of course, that helps because you reduce the barrels, you do all the dance. That's pretty normal for OPEC. They love doing that. The second thing is going to be yields increasing. Now, that's very good for the old oil, and that's been pushing it up there in anticipation. So it's actually bucking what usually would be a weakness period for oil at this stage. And I'm very interested to see what it does around my most traded zone number one. So I'm basically seeing a breakout here ahead of inflation. If this fades and then goes underneath this low here, well, we know what's happened. It's trapped a lot of buyers into oil. And I've seen some reports talking about ZOM and energy stocks and everything. If you actually have a look at energy stocks here, we'll just chuck it on the charts. You can see there was breakouts across the board, and everyone's getting all excited about energy again. It is traditionally the sector that would go around this time from a perspective of recovery in a bull market. But again, I'm just looking at this for a shorter term time frame. If yields start to accelerate, I expect energy to continue to get a bit of love. We'll keep following it. The US dollar is getting crushed. Now, a lot of people are saying it's movement into bonds. It's also central banks around the world all rate hiking. And the chance of the Fed going more, especially if inflation starts to dissipate a little bit in the US, I think people are just trying to really get this short dollar on. We have had the biggest players in the market generally be short on the US dollar. And I'm a bit sad about this trade because I thought we'd be able to get a really excellent one in. And what I mean by that is this level, okay, great. I can see why it sold off. As of this point, definitely bearish. Here, yeah, you could have looked for like a little day trade kind of long if there was any switches down there. But what I was really hoping for was this kind of re-entry to allow short. That's what happens sometimes in trading though. You'll be looking at getting a re-entry because it's all about risk reward. If you're a day trader or scalper, really all you care about is ratio. I don't care about direction. I don't care about anything else. I want ratio, ratio, ratio. I want to win 4 to 1s. If I risk $100, I want to win $400. So keeping your consistency and keeping your business plan or your trading plan very consistent is important. So just YOLOing in on a short here is not really the best play. You're better off, even though that's what's happening right now, it's better off, waiting for the right levels, getting the right ratios in, and then making more consistency. So yeah, you could even pick the direction sometimes, but still not necessarily pull the trigger. And I know that seems insane, but the reason is just all about ratio from a day trade perspective. Definitely dollar looks super weak here coming into the inflation numbers. You can see this weekly, you can see the rejection wicks, the closure below or the closure on that doji. This is kind of solidifying at this stage, potential further weakness. CPI and the banks will clean this up though. If we get new lows, we're going under parity in my opinion for the dollar index. That's underneath 100, more likely into the 98s in fact. Let's move over to gold. You'd think that would bring gold forward. Well, it's pushed into the supply, and gold bulls will be excited moving forward because we're really pressuring this high here. Let's have a look at the 2 hour together just to get a bit of an idea of what zones we're in. So have we seen a switch of trend yet? We've seen a nice basing structure. I do think that we're still finding that supply here. You can see that it's sold that little level. It wouldn't be surprised at all for it to spike up first, but yeah, patience, react, don't predict. Next 24 hours, we'll come back on gold. Let's go into some stocks. We'll start off here with one that we've been rabbiting on about recently, which is PayPal. Yep, it's actually doing pretty well. It's had a great last 2 days of trade. Very, very nice. Another stock that we've been talking about recently has come back, which is, of course, Zoom. And I'm not even a fan of Zoom generally, but this type of stock, well, it'll load up in a second, so we'll get back to it. But Zoom has been doing, relatively well, I would say, over the last couple of days. And this is that kind of thing that could have wiped a lot of people's stop losses out. So it's on an acceleration here of around 4% plus another 3%. Will it continue? This is all down to the hyper stocks actually continuing their trade. And it's across the board. Whatever you're looking at, if you're going to an ARK or something, realistically, we're just seeing all of these types of stocks jumping through the roof. And that's because it's that next logical step up. We go from quality big tech and AI and semiconductors to usually high growth hyper stocks that are in the dirt. And that's the move that's going on in the markets at this stage. Will it hold? Well, there's a lot of semi breakouts here ahead of this inflation number. Let's talk about Tesla. Nothing much going on here. We pretty much stayed with inside the previous day of trade. We are still looking for the same type of thing. A gap down based on CPI will instigate what we call an island reversal, which has taken the high, and a movement up should probably give us 300. So we're probably, you would say, net bullish here, but if certain things change, you would go towards the bear side. The trend's still up. There's not much you can really do about that. Let's have a look at utilities. So utilities was seeing a little bit of resurgence over the last 24 hours. I'll actually just load them in here so you can see the rotation flows. So here is utilities, energy, agriculture, financials. They were all up on the top, and healthcare and staples were down the bottom. So it certainly wasn't a case of rotation into defensives across the board. That's not what's happening. It looks like mostly what's happening is a bunch of semi-inflation, semi-later cycle stocks are coming forward. Industrials as well. So these are all those types of sectors that happen after the big tech stocks come through. So that's something that's interesting, and we've got that in the charts. Let's move over now to the major indices around the world. Yes, actually, a few people have sent me this, Tom. They said, have we actually changed trend on the small timeframes for the ASX 200? The answer is yes. As we took that high out, we actually put in a bit of a bull move. I would have preferred this. Now, if this moves down, the problem is there's going to be buyers around here. So will we get 69.50, which has been something I've called for a long time? Seems like I'm getting within about 30, 40 points a lot of the time within these pretty long-term calls. It reminds me of Tesla when we went 152 and I think I was going 145. So here is the ASX, and yeah, I do think that looks like a bit of a turn to the bull side, at least on these small time frames. So sell-off in here, there's decent high probability buyers, and that's something that I'll be watching over the next 24 hours, and of course we'll be updating you. Daily was a tweezer down the lows, and you can see here it's now picked back up. So it took those lows, didn't quite really push underneath, and it's also a 61.8 fib of the previous moves. So I can see why there's buyers here. I thought maybe we'd get like that 69.50 push, but at this stage it hasn't happened. Let's move over to the German market. Now this is a Wyckoff style with, of course, our false break UTAD up here. And then we have a pullback. Inflation numbers, this could be an interesting trade. A little bit of a rally, maybe the first move is the false move. Then I think there's going to be a seller in here. At least that's traditionally what you do. I like to have patience and react to the smaller timeframes, but scalpers will be watching within that 16,000 line for German 40. And in fact, if this does start to sell, it really solidifies that Wyckoff distribution that we've seen so far. We got the new low, which is good. We're rallying up, which is expected. In this area is where we need to be focused in on. So if the sellers are going to remain or kind of get into it, that's where they're going to be. US 30 or the Dow, it's waiting for a breakout. It doesn't have one. It could also be like a triple top. We don't know yet. Stuck in the range, and I think anyone can see exactly what's going on there. We're basically waiting for the news. US 2000 is really interesting. This broke out to a new high. I mean, this is a new high. That's a daily close above the high ahead of the inflation numbers. It goes through the most traded zone. It's still in supply overall. And I'm super interested to see how that trades, because if this then sells off, do you know how many people are going to be trapped into this trade? It's going to be extreme. So maybe it's having patience here, but I do think as investors, I could totally see why you'd like the Russell. Rebalance came through, nice base structure. We've talked about it. Volume's off though here, and I think volumes are also off a little bit in IWM until recently. So you can see here the last 24 hours kind of, even though it's been rallying, there's a little bit off, but nice basing structure volume through here. So yeah, let's just go down to the daily and make sure. Oh, it's not too bad, actually. It's pretty consistent. So we got that huge trade that came in right on that candle, which is that day there. And although it was a little bit low into that, that kind of has been that catalyst. So yeah, IWM, not too bad at all, actually, on the volume. Let's move over to NASDAQ. NASDAQ here, nothing you can... I don't even like this market at the moment. I think it looks kind of bad. Frankly, there's nothing cool here in the NASDAQ. If we break through 15,200, I think the bulls are most likely in control, and then pullbacks will probably be met by further rallying. This is critical. We know that. We know what news is coming out. But yeah, I'm not really loving too much the 2 hour time frame. Even on the 15-minute, I just don't think it looks that great. Let's move over to the S&P 500. Now, this has done something interesting. It's come up to the exact level we were talking about, and it's just sitting there. Now, if it does rally more and it sells off here, that'll be the last case for the bears around that level up here, this high. I would kind of be very interested. If it spikes first, pulls back, I think buyers will be committing around 44.10 then to try to rally this thing up. The trend is still up, remember that. If this thing gets underneath the new low, we could be on for bears. So next 24 hours, expect relatively large moves, maybe not even just due to the number itself, but just due to the positioning that this market's doing. If we do breach to a new high, I think 45.30 is the next level of what we would call equilibrium for this market, and we'll be watching it. But yeah, initial rally, then pullback is certainly a scenario I'm playing with. If the markets do choose to sell initially, so they sell back down, then they rally back up. If we see that kind of thing play out, then there could be a decent probability short in there. For people that want to sit on the sidelines, you're really waiting for the breakouts either way to the new high or low, and then closures at those points. And swing traders, I think it's going to be very difficult to get in on this particular area. Let's take a look at Bitcoin. It's stuck in a range. Nothing much to say about that. We will, and we do like Bitcoin at the moment in terms of a longer term play here, but we're waiting for catalysts, and we're also waiting for a bit of information, a little bit more time to kind of play out so that we can play this concept of, the rotation that we're seeing at the moment in markets. If you've enjoyed today's video, then remember to subscribe and smash that like button. Remember, CPI data comes out 1 hour before the market opens, which is right here. Then we get the PPI at 8:30 a.m. Thursday, July 13th. And then, of course, we have prelim UOM consumer sentiment. Make sure you're on top of those things. Make sure you're on top of the earnings reports, which will be the biggest bit of news. And follow us for especially the next 3 weeks because, of course, we'll be covering all of the earnings and all the things that you need to be looking at. Thanks so much, guys. Catch you for now. Bye.